Hi there, this is DayTraderRockStar for DayTraderRadio.com, and tonight I'm going to start off my three-part series, maybe even four-part, with my favorite indicators, how I time my best entry in the market, be it a trade, a futures trade, a futures E-mini trade, or a stock trade, or just an overall market call, market reversal. There's a bunch of indicators I use right here. The top one I'm going to be talking about today that I use, and I count on talking about market trends and reversals. I like to use one time in a trade is Stochastics, and that's what we'll be talking about today. Stochastics are probably one of the best followed indicators out there in the market where the big boys actually use them. They work great with the S&P 500 index, and I use them with that strictly and exclusively use them with that. I don't really bother with them too much with stocks and stuff because usually the theory of a rising ship rises all boats works good when I'm in a momentum stock. I usually want to use the Stochastics to time overall market turns so I could actually time my trades again into stocks. I want everything working in my favor when I get into a stock. So I use the Stochastics to time the market. First thing I want to do is usually try to time a bottom in the market. So I use the Stochastics for overbought and oversold indications. There's the settings. There's a slow and fast Stochastics. I use a slow one, and the settings I use a 14 for percentage K and 3 for percentage D, which is the slow and fast. Again, there's a lot of information out there on Stochastics on the internet, so I'm not going to go into the history of them or the formulas. Most charting services give you already put the formulas in there for the Stochastics for your charts, so you should have no problem with that. So I won't waste your time there. What I'm going to give you is information that's invaluable to you. People probably charge you a lot of money for this stuff, and again, I just feel like it needs to. This is one of the most important things out there for day traders. First thing I want to do is find a bottom in the market, or I don't want to be getting into a stock if the market's trending down. I want to make for, market's going to go up. It's not going to go straight up. It's going to be pull back, go up, stair step up. Even if it's in a downtrend and I'm looking for a reversal to the uptrend, I'm going to use the Stochastics like we did today. First thing I want to do is I want to concentrate on buying something when we're in an oversold condition, and I want to concentrate on selling something when we're in an overbought condition. All right, so overbought and oversold conditions are outlined by the 80 line and the 20 line. Now, when this was first developed back in the 1950s, the person who came out with it actually used it as a divergence indicator, meaning that he wanted to use this indicator as a divergence with price action. So when the Stochastics was going one way and the price was going the other way, he was calling for a divergence in the market, looking for a market trend reversal. There's other ways now it's been developed, and people are using a lot of other different ways. I want to show you the way I use it. It's a very successful way. It's just the basic overbought, oversold indicator and the trending indicator here. So once we get below the 20 area, if we're selling off, you'll see the market will be selling off. And once we get down into this area, when we come back above it, I mean, you could actually buy it under this level, but you'd be taking a chance. There's no guarantee the market's going to bounce once it gets under here, because you could stay in overbought and oversold areas. So what I want to do is wait for a rebound back above the 20 line here, which I outlined for you. I just put it there for you, and I want to see a trend starting to develop now. Last few weeks we've been in a pretty bearish trend here, so a lot of the bounces we're getting haven't been really big bounces. So you're seeing not a big reaction on the Stochastics. Even though you are seeing it, you are getting a point or two, especially for you future traders out there. You can get a definite point or two, and if you're trading the ES minis, you're talking $50 a contract. You can make some money off of these moves. But like I said, I like to time overall market reversals, and that's what I was looking for today, and we actually nailed that. So once it gets down in here into this oversold area, I wait for a move above 20, and I wait for the lines, the K and the D, to separate there. That means a good bullish trend is starting to form, and as you see, I'll put a line in there. Just so you see, right when that's starting to happen, the market starts to get into a little trend here. Now again, this is not going to say the market's going to go up. There's going to be other forces in the market that you have to deal with, and one of them I put right down here is a trend line. And as you see, we have a trend line that formed from the beginning of the day, and each time we hit it, we could just put it down, and like clockwork, it hit it and pulled back. And like clockwork, the Stochastics were up in the overbought area, so we pulled back. It was a great time to take a short and pulled back. So again, I'm using other indicators with the stochastics to enforce them. I'm using pivot points, support resistance lines, trend lines, and different chart patterns like inverted head and shoulders, W patterns, etc., etc. So then around at 2 o'clock, we saw the market coming down. We're oversold area. I'm looking for a market bottom. I noticed that around the 1380 area, on the Dow, we were actually hitting August lows. And that was a major area in the market, and people were looking for a bounce there. So everything was timing perfectly. We had a perfect time at 220, which is a good time for a market reversal. We have oversold stochastics. We're far away. We're away from the trend line, and we're right on major support. So everything was saying to go for a buy here. So I called for a buy. I actually took a position in the futures, and we got a nice bounce there. And once we broke above this 20, we started getting a little rally. Then we broke the trend line, and everything was on off. And you see these lines starting to spread apart. And the more they spread, is more momentum and more buying pressure there is in the market. And you saw we had a rally into the close. And even once we got above that 80, as long as we stay above that, the market continued to rally. So really good indicator here. Again, it has to be used with pivot lines, support lines, trend lines, and chart patterns. But this stochastic indicator is a must. You must use this each day. You must use this in your trading arsenal. Because if you be trading blind if you're not using it. This is my favorite indicator, and I use this with the S&P. And like I said, I use it with the S&P because S&P is the broadest of the indexes. It's not the Dow 30, and it's not the NASDAQ 100. It's the S&P 500. 500 stocks making it the most followed index. So a lot of people use this. And again, just wanted to show you this. I want to give you another example fast, if I could actually pull this up fast. I don't have much time here. Actually, I don't see it anywhere. I did have another chart here I wanted to show you, but I don't have it. I don't have it there right now. I wanted to show you convergence, but I want to get to that to another time. The next video I'm going to do is actually going to do a video on pivot points. If there's any questions or comments, you can email me at ironaction@yahoo.com. I'm DayTraderRockStar, and this is a basic introduction into stochastics. 14.3 S&P 500. This is the key. Don't buy in the oversold. Wait until you get a trend going, and the trend is your friend. You can't go wrong with this indicator. I would say 80% of the time you get above that 20, starts the lines start to open up. You have a major, you have a nice rally, and especially in a bullish trending market, this indicator is like perfect just for getting pullbacks and continuing to ride a trend up. All right, that's it for now. Be sure to tune in tomorrow, DayTraderRadio.com. I'm DayTraderRockStar, and look forward to the next video on pivot points. I'll try to get that out tonight or tomorrow. And then after that on some special chart patterns, and we'll try to continue the educational videos going. Good night, everyone. And I don't think I'm missing anything. Just, yeah, I think we're doing pretty good here.